Well, all right, everybody. So today is my first red day in a long time. And boy, oh boy, did I make it a red day. I am down $3,505 today. And, you know, um, it's not that bad. I know that this is an outsized loss. This is significantly larger than any risk I had anticipated taking. And I've worked really hard to limit my losses lately and in past months. This is the first big down day in a long time. I've had down days, negative $200, negative $150. You know, I think, somewhere around the end of the year last year, I had a negative $500 day, something like that. But certainly nothing like this. So let me show you what I did wrong, and then I'll show you kind of why I limited my gains on TRIP today. Would have been a great trade, but anyway, yeah, let's go over it. So let's start with where is it? Large cap movers. Oh no, it was in the small caps. COHN, COHN. Look at it, popped up. I coulda, shoulda, woulda. Let's go to the 1 minute here. So let's get rid of the Fibonacci. I put the Fibonacci on it afterward, I think. I don't remember. So this morning, COHN, I had it on pre-watch. I was watching it pre-market. When I got into the office this morning, it was like around $25 or so, something like that. Finished doing my pre-market, and I think I went to the bathroom. I came back and it was up around, it was up much significantly higher. I was like, wow, well, let's see how this thing trades when it, opens up in regular hours. And I got in. So the spot where I should have gotten in if I wanted to take a trade on this was over $48 on this candle right here when it broke this previous 1 minute high, right? I watched it dip down to roughly 36, and I watched it run up to 52, and I was like, okay, we've got a live one here, right? And for whatever reason, I hesitated at taking the entry here at $48 after it broke the high of this candle right here for a run of from 48 to 52. There's a $5 run there. And so I probably could have gotten a couple of bucks out of it. I probably could have, out of a $5 run, I could probably have gotten about $2 out of the run. Well, instead, I chose to enter when it started making new all-time highs. So it broke 52.03, and I got in at $52.15, which is on the day's high here. There's a high of 52.70, so I was in at 55 cents lower than the high of the day. I was like, okay, this thing's going to start ripping up, new highs, momentum, and it failed big time. And I was down like really very quickly. I was down $1,000. Let's look at it on the 5-second time frame here. So let's see, 1 minute. So I entered at 9:42 and change. I don't know exactly what time at 9:42 it was. So let's go to the 9:42 time frame. Momentum got me today. And so it came down here, and then I was like, all right, it's going to recover. I was down $1,000 right here. I was like, it's going to recover. This is the 5-second time frame, right? So it comes down. I'm like, okay, this is just, this is a micro pullback. This is a quick pullback. This thing had a wide, there was a large spread on it of like $1 per share. So it's like, okay, this is this is to be expected, and it came up. This is a 5-second time frame. So I bought it. I think I bought it on the first break of the high. So I bought it right in here, right here, somewhere right in there, in this 1, 2, 3, 4, this 25-second time frame. I bought it at 52.15, right in here somewhere. So they came back up, and I was like, okay, so it's it dropped down real fast for a few seconds, and then came back up, and then over the course of the next 15 seconds, it went down $5 a share. Then it started to recover again. I was like, okay, now we're on our way back up. And then 15 seconds later, it was down at $44. And at that point, let's see, on 200 shares, I was down $1,600 on the thing, and it went into a halt on the way down. So I was like, okay, well, sometimes these things, they come out of halts and they start running back up again. So let's wait for the halt to come out. Came out of halt. It bobbed around here for a little bit, started to run up again. I was like, okay, here we go. It's getting ready to go. I could have let go of it right around in here somewhere for a loss of about $1,200, but I didn't. So it ran back down again to $38, and I think I let it go right before this halt right here. So let's see, on 200 shares, I had a loss. The first trade that I took on it had a loss of $13 per share on 200 shares for $2,600 daggum dollars. And then instead of walking away and just being like, all right, screw it, I think I tried to get in again here for this pop of VWAP, for this move over VWAP. And I don't even remember what price that was. But I lost another $5 on the stock. I probably got into it pretty close to the high right here, and then let it go. And I was like, okay, I'm done trading this stock for the day. This stock alone today cost me $3,600, $3,600 on that one stock today, trading 200 shares at a time. Boy, was that a mistake. Now, my first mistake was not getting in. Let me go back to the 1 minute. My first mistake was not getting in at the proper spot, which would have been this spot right here at $48 even. I probably would have gotten in a little bit higher than $48. And then caught a quick pop. And $4.80 would have been a 1% pop. So I would have so I wouldn't have hit 1%, but I probably would have gotten out before it went negative on me instead of getting in right damn near the top. So that was my first mistake, is not taking the first 1 minute candle to break into a new high. Second mistake was not getting rid of it fast enough. Once I'd gotten a 1% loss, which would have been $47 and change, $5.20 would have been a 1% loss, which would have represented $1,000. But losing $1,000 is a lot less worse than losing $3,600. And then my next mistake was not seeing that this thing wasn't this. So momentum has been pretty tough very recently. Momentum has been a really tough trade. There have been a lot of stocks that have been popping up like this. They pop up, gap and go after the open, and then they just drain out for the rest of the day. So the third mistake that I made. First mistake was bad entry. Second mistake I made was not letting go of it soon enough after my risk tolerance was hit. And then third mistake was trying to trade it again. This is the way the game is played. And I was upset about it. I am upset about it, not like you would think, perhaps. When I first started trading years and years and years ago, and it's kind of funny, it didn't bring up the same sort of emotions or feelings, but I remember what losing was like so many years ago. So I have to remind myself, the game is rigged against traders. The market is not for traders. The market is for investors. And everything from the spread to, the competition are the market makers, the professionals, the retail traders. The cards are stacked against you. So you got to be smart and fast and have a lot of experience. So at least I wasn't going for 1,000 shares, right? if I'd gone for 1,000 shares, I'd be down like 15, 20,000 today, something like that, 30,000. I'd be down big time today if I were trying to trade any kind of share size. So fortunately, I limited my risk in that respect. Well, so, but I was remembering, when I first started, I was like, I could swear there's somebody watching me trade, and there is. I could swear there's somebody, like on the other side of the trade, just watching me, knowing when to buy and sell, and there is. That's kind of the trick, there you are being watched, and many thousands, probably millions of traders before me have been studied and watched, over lifetimes in order to know how to trade against you. That's the way it works. That's to first accept that and realize that, knowing is half the battle, G.I. Joe, but knowing is half the battle. I am nothing more, if you've ever watched the National Geographic channel where the little fish come and clean the hippopotamus as it sits in a lake, I'm nothing more than a little fish in this market who comes and cleans the plaque off of the hippopotamus's teeth. One day I'll be a hippopotamus, perhaps, we'll see. But as of right now, my best chances of being successful in the market is taking small bites off of what the big market provides. So that was COHN. And all the emotions that used to come up when, I was, first started trading, I'd get like angry and it would bring up, times when like, I don't know, I'd missed the goal in a lacrosse game when I was in high school, or gotten dumped, like these feelings, like, these feelings of betrayal and disappointment and so forth, they don't come up anymore. But if they're coming up for you, you got to recognize it. And then you got to figure out how to get past it so you don't feel them anymore. So I wasn't feeling those feelings anymore, but I remember what a loss like this used to do to me. And so I got to make this fast. I'm here late in the office today. I need to, my wife is calling. So TRIP, TRIP, this was a great trade, but I decided that instead of, so 52.52 is the number that I was really confident about. And you can see here in the morning, the first minute of the day, it came down to $52.50. And what I decided, I was going to take 400 shares on this. And originally what I had planned on doing was putting 100 shares at 53.38 and then 300 shares at 52.52. Instead, what I did was I staggered 400 shares, and I staggered them at $52.75, $52.50, $52.25, and $52 even for an entry. And I only got filled on 100 shares when it came down to $52.75, and then took off without me. Well, it took off with 100 shares, and I think I took profits in the either the first or second, the second or third minute of the day here. And so what could have been a $400 or 400 share trade here, let's see. If I'd gone in at 52 or 53.38, 53.38 times 100, plus 52.52 3 times. Divide that by 400. I would have been in at $52.73 a share for 400 shares. And I let this trade go for a 71-cent profit. So suppose for a moment, and that was at $52.75. So let's just say 400. So My average entry would have been the same as the single. It was very close to the same as the single entry on 100 shares at 52.75, which is so. Anyway, let's do this. Clear 400 times 0.71. A $284 trade would have been, it's respectable. That's a respectable trade. Momentum got me today, and that is approximately about 2 to 2.5 weeks of profit for me on average. So I've put myself back to, what is it? It's early March. So I've put my profits back on the year as though I were trading in mid-February again. All right, everybody. That's the recap for the day. I hope you had a great day. I hope this video is helpful to you. Take care, and I will see you tomorrow morning.